Hi class, this is part 2 of our NSS. Like we previously said, this is really a practical take at your exam paper. So it's basically as if you were live into the exam that you're going to write. And these are some of the tips and some of the things that I would like to point out to you. Please remember again that we are not covering theory per se, although we are applying the theory. So if anything is really going way over your head, please refer back again to your notes. Make sure that you understand some of the principles. But we're gonna focus on question 5 to 7 in the second part of the NSS. So let's delve into it. Again, read properly the questions and focus on what is required of you. All right, so for question 5, we have convention sport manufacturers. This conversion sport manufactures two a type of rugby balls. We have one a rubber and a leather one. These are things that need to pop up. All right, so using the same machinery processes, right? The manager has asked for your assistance in determining the overhead cost per leather rugby ball, right? It's quite specific. We are not talking about the rubber one, but the leather rugby ball. And what do you need to determine the overhead cost per leather rugby ball? So one leather rugby ball, how much is the overhead cost? Right? Quite specific, okay? And you are recommended to use the ABC. As you know, the particularity of the ABC is that it's more accurate and it does provide also a variety when it comes to the cost drivers, and that hence the reason why it is more accurate, right? As opposed to the traditional. It does make sense that you are being asked for something more specific, more accurate, right? So one of the things straight into it, you look what are some of the cost drivers here. You see that there is obviously the production output that is provided to you. The direct material cost per unit is provided to you in the table, and you are seeing machine hours per unit. That's a driver cost, right? For the machinery department. We can basically see that there are two departments here, the machinery department and the assembly department. All right. So if you are doing the traditional, refer back again to your note. These are the two things that you would be looking at. Okay, the machine hours per unit and the direct labor hours per unit, right? That makes perfect sense. But there is a cost pool that is provided to you because you are dealing with ABC. You have the machine services, which will be related to the machine hours per unit, the assembly services, which will be related to the assembly department and specifically to the direct labor hours per unit. But you have also two others that are added: order processing and purchasing. All right, so the next table does provide you how many orders were made for the rubber bowls for the production of the rubber bowl, and how many customer orders were made for the production of the leather rugby bowl, right? And then you have supplier orders that is there. All these are provided. Okay, these are cost drivers, and let's go quickly to the answering the memo. And when you're looking at the memo, it's quite clear. You have machining, assembly, right? Because you have these four cost drivers that were provided to you. Those are the one that's going to help us to do the calculation, right? I have provided you with all the annotation for you to be able to see clearly. So you have machining, you have assembly, you have order processing and purchasing, right? So errors shows you exactly. The good thing is that in the cost pool, they provided the total cost, right? But remember, what we are looking for, it's the cost per unit. We are looking for the overhead cost per unit, right? Cool. So when you're looking at the cost that we're given, the total cost, that's the first part that is taken into account. When we're looking at the cost drivers, right? For machining, for example, we have for machining We for the rubber, because remember the total cost is for both the rubber rugby ball that is produced and the leather rugby balls that are produced. So this total cost covers the both production. So that's why you can't isolate at this point and focus only on the leather. That is impossible. And that's the thing that you need to pick up is that this entire production use the same processes, the same machinery, and that's why it covers both the rubber rugby balls, and as well as the leather rugby balls, right? And so, given that this is the situation, we will take the total cost that was provided for machining services, which is 69,750. When we're looking at the cost drivers, we will take the total production, which is the total output unit for the production. For the rubber is 2,500, for the leather is 3,000, right? So you take this unit, how many machine hours though? So for the rubber is 2, and for the leather is 3.5. Okay, so that's what we're going to do. We multiply 2,500 by 2, which is 5,000, plus 3,000 units times 3.5. As you can see, this is the calculation. So what are we trying to find? We're trying to find out what is the total hours for the machining. We have the total cost that was provided, but we need to find out how many hours actually of machining services was 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 necessitated. Let me put it that way. So we find that it was 15,500 hours, right? Then we can find the cost driver rate, because we will take the total cost, we will divide by the total number of hours, then we will find the cost per hour of machining services, right? The same would be also the same logic will come for the assembly services. We will do also the same to find the number of hours for assembly services. We're going to take the total cost that was provided, which is 140,000, right? We're going to divide by the number of, if we can put it that way, direct labor hours per unit that was necessitated, all right? We will find 28,000 hours was needed to produce rubber, both the rubber rugby balls, which is 2,500 rubber rugby balls plus 3,000 leather rugby balls. So to produce all these balls, right? So when it comes to the direct labor hours, we find that it necessitated 28,000 hours. So now we take the total cost divided by the number of hours. That's how we find the 5 rand per hour, or per direct labor hour, right? So that's the cost there. So these cost drivers, once we find them, the same is for order processing. As you can see there, we can calculate the order processing for the rubber and the leather. When we add them up together, the number of hours that was necessitated for the rubber and the leather, we find that it's 3,250 orders, not hours, sorry, orders. Here specifically orders. For the supplier orders, we found that it's 500 plus 1,000, which is 1,500 supplier orders, right? So when we take these totals, we take the total cost that was provided for the order processing, which is 26,000. We're gonna divide it by the total customer orders, which is 3,250. Basically, that's why we found the 8 per order, 8 rand per order, and 100 rand per order when it comes to purchasing. Okay, so I trust everything is clear. This is the easiest way to find the cost drivers. It's clear there. So we can see that we have different cost drivers there, right? What was the question? Let's go back again to the question. Calculate the total overhead cost per unit for the leather rugby ball using a activity-based costing, right? So now that we have the 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 the, the actual cost driver rates, now that we have them, we can now look at specifically We look at the machining services when it comes to the leather, the leather, only the leather specifically, because that's the question. So if you as a student go on to calculate for the rubber rugby balls, you are wasting time. Again, look at the question and what is asked. They want you to focus at the leather. So we will look at, for example, the machining services, right? We know that we have four rand and 50 cents, 4 rand and 50 cents for the cost driver rate for the machining. We're gonna multiply it by how many hours when it comes to the ladder only. How do we find that? We take the total production when it comes to the ladder rugby balls. The total production is 3,000 units. How many machine hours per unit? How many machine hours per unit is 3.5. We take the 3,000 multiplied by 3.5, we get 10,500 hours. That's why we would take the machining services cost driver rate of 4 rand and 50 cents multiply by that number of hours for the production specifically of the leather rugby balls. For the leather rugby balls, right? So it's we will do the same for assembly services. We will take the cost driver rate, which is 5 rand. We will find out what is the total number of hours, direct labor hours, that is necessitated only for the leather rugby balls, which is the total unit is 3,000 multiplied by how many direct labor hour does it take to produce one unit? Is only 6 hours per unit. So 3,000 multiplied by 6 gives us for the total 18,000 labor hours for the leather rugby balls. Not for the rubber rugby balls, but for the leather rugby balls. So same principle is applying, and this will provide us the total overhead cost for the leather rugby balls. We will look at the total units is 3,000, which is well known. So we're going to take that total overhead cost divided by the number of units for the leather rugby balls to get the overhead cost per unit for the leather rugby balls, not for the rubber rugby balls. All right. Okay. So quite straightforward. Question number 6. As we go into question number 6, as you can see, how's that? Limited manufactures cricket bats. Okay, what you're seeing here is that providing you jobs. If you see job, you know that this is learning unit 7. That's your last unit, that the last unit we touched on. Not much of a difference because we need to look at the factory overhead as usual, right? Okay, so what is important here is we focusing on jobs, all right? They've provided you two jobs. Job number one, they they numbered it or it's A50. Job number two, D75. But they are telling you, look at the dates that is very important there. They say that the schedule of cost relating to jobs in process as at 31st May 2021. 31st May 2021. Okay, 31st May 2021. But when you're looking at the second table, it says schedule cost incurred on job during June. So we understand that at the end of May, okay, at the end of May, beginning June, we have a balance. We have a balance of direct material, direct labor, overheads. How do I call these three? I call them the three musketeers. Okay? So when you see them, they are direct labor, direct material, overheads. So they provide you, but these are opening balances, meaning that they were probably left from last production. What we know is that for June, we have another job that was not included previously. Okay, you have a job that has no that has there's no batch that is has been produced. You have D75 and G25. G25. Okay? You see, so G25 is specifically for June because D75 we have it previously and we have a specific what do we have? A specific number there. Sorry, what am I saying? We have D75, we have an opening balance for D75, but 850 is not there for June. I'm not seeing it. But something that is told to us, it says that completed, when you're looking at the completed jobs, factory overhead are applied at a rate. Let's look at the additional information. Basically, what they're providing to us when it comes to the previous table. Just before I touch on the additional information, the the second table, as you can see, there is direct material and direct labor that is provided to us, right? But I want to specifically come to the additional information, which will provide context for all this, because this additional information is something very important for you to read. Factory overhead are applied at a rate at 20% of total direct material. So that's information that is provided to us, sorry. The only job still in process at June at 30 June 2021 was D75. So we know D75 was not completed. All other jobs were completed during the month. Ah, it does make sense now. So basically, I can see that the first job and the second job and the third job were completed. So G25 was completed, and I suppose the first one is A50 because there is no other way that it could only be A50. So perhaps there was a mistake on the paper. They failed to write A50 there. So just pay attention to that. Okay? Because the second bullet point for the additional information tells us that sales during June 2021 were as follow. A50, 54, all 54 bat. So we understand that even though they say no NO sort of bat, maybe they're trying to confuse you. Maybe they're trying to confuse you. You don't need to worry. But what you need to understand is that 50 45 bat, meaning that the whole production was sold. The whole production was sold. But when you're looking at G25, which was also completed, 60 bat were produced. But bullet number 2 tells us that for G25, remember again, for A50, all bats were sold at cost plus 75 markup. All right, so that's important. So the cost will be 175%, right? 175. That will be the, sorry, the sell price. Okay, that's the sell price. So we will take the cost which is 100%. We add 75, which is 175% will give us the price. Okay, but we understand that all 45 bats were sold. Okay, whatever was produced was sold, but this is not the case for G25. 48 bat were sold at a price of 250, so they did not sell everything that was produced in June. Out of the 60 that were produced, only 48 bat were sold. So I trust you reading this properly. Only 48. The actual overhead for June is The actual, remember, whatever we are talking about is what we have. This is what we have budgeted. All right. This is a forecast. All right. But there's also the actual overhead. Why there's an actual overhead? So that we know whether the budget was over, the overhead budget was over applied or under applied, right? You know that part, right? So actual overhead for June 2021 were 3,500 rand. 3,500 rand, right? So marketing and distribution expenses are also provided, which amounted to 5,200 for the month of June 2021. So you ignore spoilage. What is the actual question here? Okay, I would guess calculate the cost of the completed jobs because they will not ask you to calculate cost of jobs that were not completed, right? Okay, let's be careful again. That's why I put there for you for your indication. For job A, A50, what was produced equal what was sold. But for job B, only 48 only 48 bats out of the 60 were actually sold for G25. Okay, all right. So the one that we're not going to calculate for now, for question 6.1, is D75. Why is that? Because it was not completed. Additional information told us that. Okay, so now let's move quickly to the actual answering sheet. So as you can see, for 6.1 and 6. For 6.1, you are looking at A50 and G25. These are the two jobs, right? So work in process opening balance. Remember there was a balance. Work in process for A50, we will take the direct material, direct labor, and overhead. We're going to add them up together. That gives us an opening balance amount. Okay. But for June itself, right? Remember that this is at the beginning of June. We had an opening balance, but for June itself, when we look at the first job, which is A50, we have 3,400 for direct material and 4,250 for direct labor. These two things, you add them together. They are there. You need to put them there. The overhead, it was told, look at bullet number 1 for additional information that factory overhead are applied at a rate of 20% of the total direct material cost. What is the total direct material cost for A50? For the job A50 is 3,400. We just wrote it now. So we will take 20% of it, which will be the overhead, and that amount is 680, right? So that will provide us the total cost for job A50. For G25, there was no opening balance, so we don't need to worry about that. What we worry about is what is the direct material, what is the direct labor, and the third one of the three musketeers, sorry, is the overhead. We will take the 5,000, which is the direct material cost. 20% of it represent the factory overheads of 1,000. Right, so we add everything together. And that's it. Question number 1 is done. Calculate the closing work in process at 30 June 2021. What is the closing work in process? All right, when you're looking at the closing work in process, meaning what was not completed. What was not completed? D75 was not completed, meaning it's still a work in process. Therefore, we will do the same, but this time we're only going to do it for D75. We're going to take the opening balance. It has an opening balance. We add up together the three musketeer, direct material, direct labor, and overhead. We add them together. That provides us an amount for the opening balance. Now, for the month of June itself, for D75, we have direct material, we have direct labor, and we have overhead, right? We add everything together to find the total. Done for question 6.2. Question 6.3. Calculate the net income for the month of June. The net income. What would the net income include? Only the two jobs that were completed. It will never include a job that was not completed. All right. So as you can see there, there is the sales. Remember now, how many bats did we sell for the job A50? It was provided to us in bullet number 2 of additional information, 45, the whole entire production. So it does make sense that we take the sales, but how would we find the cost? How would no no sorry, how would we find the sell price? It was provided to us. They were sold at the cost plus 75%. All right, so we take the cost. What is the total cost that we have for job A50? It's 12,505. We multiply it by 1,75, which represent 175%. 175 divided by 100, which is percent, right? Okay, so that will provide us the sales minus the cost of sales that we just used of 12,000 provide us the gross profit. But it's not going to be the same thing for the job G25 because we produced 60, but we only sold 48. So, but it provided us what the sales price is for G25. It was 250 per bat. So 250 times 48 will provide us 12,000, which we understand is the revenue that we got from the sales. So revenue from the sales, 12,000. But when it comes to the cost of sales, we need to be careful. What we're not going to do here is to take the entire total cost for job G25, the 12,700 up there. We're not going to take that. Why are we not going to take that? For a particular reason, because this is for 60 baht. So we need to divide this by 60 to get the unit cost, all right? Multiply by 48. That's the meaning of this operation, all right? What we're going now to do for the gross profit again, sales minus cost of sales, which provide in red the amounts that we have there, right? So now, when we add up everything together, okay, for both jobs, because they didn't say calculate specifically for job G25 or job A50. No, they say for both of them. That's the reason that we are adding them together. But we have other costs. What are the other costs involved here? They did tell us that for marketing and distribution expenses, the cost amounted to 5,200. We're going to minus that in order for us to get a net profit, right? So there is the net profit because we were asked the net income, or you can also call it the net profit, right? Okay. Then the final question there says calculate the over of course. That question will come. That's the reason why they provided us with the actual overhead for June. Bullet number 3 for additional information. Actual overhead for June. They provided us an actual, meaning we're going to take uh, the unit cost for these jobs, A50, D75, and G25. Okay, we're going to take the overhead cost. Sorry, I said unit cost and I said the overhead cost. Remember, when we go back to this table, there is an overhead, all right, that we calculated. Let's take all these overheads together. We add them up together, which provide us the overhead for all the jobs. The overhead for all the jobs amounts to 2,100. Okay, now what was the actual? 3,500. So there is definitely we under applied because we got less than the actual amount. So that means that we under applied our overhead costing. So we budgeted wrongly. We went way below what was actually going to turn out to be the cost. right? And that's basically it for question 6. Let's now tackle the final question. This is a very important question, and as you remember, this particular question, match examples in your notes, refer back again to your notes. But even in your exam, it will come the same. And that's the reason why, again, because I've noted that some of you will miss one, two, three items or don't know how to put it together. I have provided exactly all the links, all the arrows to show you where the amount is taken and where it is going. This is something that you need to practice today. Practice this example today to find, but meticulously, I have provided every cost, right? But you will be provided a table like this with opening balances and also, in this case, closing balances. If you look at balances at 31st May 2021, you have closing balances, which is quite interesting. So we have both opening balances, closing balances, and what actually transactions transpired during the actual month. And here you have to do the accounting work, right? You have to do the accounting work. But you have cash purchases of direct material. What does it tell you? This goes into the direct material account, right? So you have direct material, you have credit purchase of that of raw material, which is direct material. That's the reason why I put there next to 100,000 and 150,000 DM to represent direct material. So the total there will be 250,000. It doesn't matter whether it was both cash or on credit, doesn't matter here. We want to find out what is direct material, what is direct labor, what is indirect material, we want to find each account in it on its own. What is overhead? Okay, the three musketeers here are very important. Okay, so railage charges on purchase of indirect material. All right, this will go to indirect material account. We can make an indirect material account. I call it IM, indirect material, fine. But this cost for railage, railway charges, uh, are important to be added to the cost, the indirect material cost. Sales of finished product is also provided to us. Import duties of material purchased was paid cash. Direct material. This import duty needs to be added to the 250 above because these are part of the same thing. Wages, but now you got to be careful. Every time they open a bracket and they start to a parenthesis and they start to talk about 70% of this, 70% of that, it means that you need to be more careful because some of the cost will go to the admin, but what we are interested in is what is manufacturing. So if they say 70% of the wages went to direct labor and indirect labor obviously will be the rest, 30%. So that is something that we need to pay attention. When we're looking at the direct material as such, when we're looking at the direct labor, sorry, not direct material, when we're looking at the labor, we are not going to give to input this amount of 600,000. Why? Because only 70% of it, or the amount of 420,000, is actual direct labor. What else is part of the direct labor? Medical aid, UIF contributions. These belong to direct labor as it's written there. These are direct labor. You need to add them up together, right? And that's how you find what was the input that was sent into the working process. For the direct material, obviously, we have direct material that for the cash purchases, credit purchases, we put them together there. The import duties, remember, that direct material, we added them together, right? But we have also an opening balance of direct material that was provided to us at 16,000. Can we look at the closing balance? Is there a closing balance for direct material? No, there is no closing balance. So we are safe to say we have the opening balance, we have what transpired during the month, and we have a total. Okay, this provides us with the total. There is a balance of 68,000. There's a balance of 68,000. Where does it come from? Very important. Where does it come from? Because if you look at that's why I read everything to understand it. Okay? Insurance. What is the insurance for the admin offices? What is the insurance for the factory? Okay, you need to separate apples and oranges. But in that table, on the next page, the direct material issued to the factory was provided to you. That is very important. If it was provided to you and the amount is 220,000, that's what is going to help us to find what's the balance. Because we have all the direct material, but what was sent for the actual production of goods is only 220. So the balance, we need to take it outside. And that's why you can see this balance is taken outside because it was not used. All right, that's how you calculate this. Okay, so we have now basically the ledger for the direct material, the ledger for the direct labor. Now, wait a minute. What are they asking us? Exactly so. They're asking us to prepare general ledgers for these accounts. Okay. And what is the first ledger they ask us? Direct material, which we've just completed. The second ledger, direct labor. Oh, they may decide also that they want also an indirect material. Okay, it does make sense because we do have indirect material here. Remember railage charges on purchases for that indirect material? It was 25,000. And that's 25,000 needs to be added to this ledger for indirect material. 25,000 need to be added. There it is. Is there a balance? Always check. Is there an opening balance for indirect material? Yes, there is. As you can see on that first table, indirect material inventory, there is a 4,150. That 4,150 is the opening balance for indirect material. What else is indirect material? What else is indirect material? What else is indirect material is the fact that there is an amount there. If we go to after salary, okay, so you have insurance, maintenance, salesman commission, advertising salaries, and then you have indirect material purchase on credit. It is there. It is there. Is there another indirect material? Rent, depreciation, sales returns? No, there is no. So we will add that as an indirect material. Okay. But we need to find out if there is a closing. Is there an indirect material closing balance? There is. Okay, this is very important. So this must not be part of the total because it was left out. It's closing balance. And that's the reason why we're going to add the opening balance plus what transpired during the month, but we're going to leave the 31,250 outside, which by the way is the balance. Okay, so the actual amount the actual amount for indirect material that is taken into account into the actual production is 100 and 1,000, sorry, 100,000, 100,400. What is important though here, this is not going to be work in process. This is factory overhead cost. So see the difference because it's indirect. Everything that is indirect actually is overhead because it is not direct. What is indirect? I repeat, what is indirect labor? Indirect material is forms already part of the overhead cost. So this amount of 100,400, this one would be sent to the factory overhead. So after indirect material, there is a factory overhead cost that is there, that is required of us, right? We need to calculate that. We need to do, read again, remember 7.5, ask us to do a ledger for factory overheads, okay? It does make sense. And the first thing that will be sent to the factory overhead would be the indirect material. As you can see, I'm showing you the arrow. This amount will be sent straight to the factory overhead, but it's factory overhead. What else needs to be sent to the factory overhead? Indirect labor. Indirect labor, okay? Is there an indirect labor as such? Read again, read all the items, familiarize yourself with the items. Is there an indirect labor somewhere? Where you would say, Patrick, there is no such. But I would tell you no. And that's where you need to be very careful. Because for the wages, look at the wages. 70% of the wages is direct labor. What does it tell you? That the balance is indirect labor. Meaning 30% of that 600,000 or 180,000 is indirect labor. That's where the indirect labor comes from. Electricity that was provided to you, you need to check, is it electricity for the factory or electricity for something else? Be careful. There is an electricity for the factory of 100, 190,000, right? So we take that into account. What else? Insurance must be taken into account. It's an overhead cost. Maintenance must be taken into account. But now let's check. In insurance maintenance, they provided it to us. It's 180,000. We will take it as it is because it is factory maintenance. Okay? Insurance, they say that the administration offices require only 65,000. The balance is factory. The balance, what is the total? 140 minus the 65, we will get 75,000 belongs to the factory. That's why you see insurance there, the amount is 75, maintenance 180, rent. Of course, we need to find out, is it rent for the factory or is it rent? Rent for the factory takes up 80% of the floor space. So meaning from this 90,000 that is provided to us, 80% of it, 72,000, is for the factory and 18,000 is for the admin. You need to make that clear, all right? Because it's going to be very important. So rent, 72,000. Depreciation for factory equipment. They provided us a depreciation for factory equipment is 56,000. We take it as it is, but there is depreciation on delivery vehicle. It has nothing. Delivery has nothing to do with the production. Okay, so adding up this together, that's it. We will find the amount of overhead cost that went into the work in process, right? Okay, what are the two others that, what are our other, uh, 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 um, so we are here at 7.5. Two others that are provided to us after work in process. The obvious next step is the finished goods, but they didn't ask you to do the work in process. They only ask you to do after the work in process, the finished good and the trading account. Basically, that's all that they asked you. It doesn't matter. We know what is work in process because the finished good the on your left hand side, you will take from the finished good, you will take all the work in process. So all the work in process that we calculated for the direct labor, direct material, and for the factory overhead, the work in process is on your left. When you're looking at your screen, it is on your left. It is written work in process. So those amounts, we're gonna land them here. As you can see there, all those amounts, but you need always to check, is there an opening work in process? An opening balance for work in process? Yes, there is. There is an opening balance of work in process. There it is. As you can see, work in process 18,000, there is an opening balance. So we're gonna add all that. But remember, what is the actual ledger? The ledger is the finished good, right? Is there an opening balance for the finished good? Yes, there is an opening balance for the finished good. It's 30,000. So let's start there. So for the finished good ledger, we will start with the opening balance for the finished good. And now we need to put everything that is work in process. We put everything that is work in process, but we need always to check, is there a closing balance? Check your closing balance. There is a closing balance for unfinished goods, for finished goods, and for indirect material. So, unfinished goods, meaning that this remained work in process, 71,500. This unfinished goods, we need to minus it from the work in process. Okay, so meaning that from the work in process that we are calculating, we need to minus this unfinished goods. And what is the balance of the finished good? What is also left for the finished good? Remember, there is a finished good balance. Finished good balance is not unfinished good. Unfinished good is work in process. There is a difference between a work in process, something that is still being built, something that is still being manufactured or produced, and something that is finished. So when you have a closing balance for finished goods, it means that these finished goods were not sold. Very important. I will not clarify this more. It's so important for you to understand that. So unfinished goods is work in process, but we need to minus it from the work in process. Okay? Unfinished goods is the same thing as a closing balance for the work in process. And the closing balance must be minused. So, in other words, the closing balance of work in process is also known as unfinished goods. I trust that's clear, right? Okay, so we're moving on to the balance. Now we do have a balance for the finished good, a closing balance, which is 112,000. Okay, it's there. That's the closing balance. So when we are calculating the finished good, the amount that we need to take into account is 1,515,700, right? That's what we need to take into account. The closing balance is not taken into account. It's a balance at the end. But what is the actual cost of sale? Meaning, what are the actual product that were finished and were sold? Cost of sales. What is the amount for the actual product that were finished? They were completed, their manufacturing production was completed, but they were not sold. That's why we need to take this total amount minus the balance to find what the cost of sales is. And this cost of sales will go straight. into our trading accounts. Okay, so cost of sales goes straight into our credit account. What else needs to be taken into account into the trading account is the sales returns. You see, we sold product, but we need also to take into account the product that were returned to us. Very important. So we need to add them up together. So we have the sales returns, meaning that these are products that were not uh, 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 that were returned to us, but they form part of our cost of sales, right? But they were returned to us, okay? And then we do have the sales that was provided to us. So you remember the trading accounts, it's you need to balance the cost of sales on one side and the sales on the other side. How much did we sell? We sold up for an amount of up to 2,250,000, right? That's what we sold. Okay, so remember sales returns plus cost of sales, sales returns plus cost of sales. We take all that into account. The sales return plus cost of sales, that will provide us our final sort of cost of sales, right? Sales returns plus cost of sales. We look at the total sales minus the bulk of sales returns plus cost of sales will provide us with that amount for profit or loss. We know it's profit because the amount for the sales is greater than the amount of sales returns plus cost of sales. All right? If it was less, it would have been a loss. But since the sales is greater, then it's a profit. All right, there you have it. Uh, There you have it. That's it for the entire practice. Please spare at least 3 hours prior to the day of your exam. It's always important to spend enough time to practice. Spend 3 hours. Take this same exam. Do it on your own by yourself. And if everything checks out, you can see that you are ready for your actual exam. Definitely, I expect that majority of you will get distinctions. So again, like I said from the very beginning, no panic. So it's not necessary to panic. I think keep your head above the water and everything should be straightforward. All right. Wishing you all the best for your upcoming exam. Bye.